Well, in year 2005, when we set up the joint venture fund management company in Shanghai at that time, there was an opportunity for me to join, and the reason is at that time is I happen to know both our partners, major shareholders. Schroders, obviously I've been working with Schroders for the last 25 years, and also I know the Bank of Communications shareholders and the people there quite well for a number of years. And one thing they are looking for is people who they can trust and have confidence in managing the company. And I somehow seem to fit in with the requirement very well, so I took that opportunity. And also at that time, I thought it is a very good opportunity for me to contribute to the development of the China fund management industry, and in particular our joint venture fund management company. I usually go back to Shanghai every Monday morning and come back to Hong Kong every Friday afternoon. Most of the time, there is not that much difference whether I work in Hong Kong or work in Shanghai, because most of the time, the weekdays I spend in the office and with the colleagues and with clients and with regulators, and also sometimes I do a bit of marketing for our companies and to promote the brand names and recognition by the public. As far as the lifestyle is concerned, it's not much different, because most of the time it's already work. In the evening, I usually spend time at home, watching televisions and reading articles and so on. It is, although the fund industry has developed for quite a number of years, since 1998, when the fund management industry was reorganized under the CSRC, and the open-ended fund started in year 2000 in China. So as far as the development is concerned, it's still at the very early stage, but the market has developed very rapidly. The fund under management has increased substantially, and there's a lot of opportunity for overseas companies to work along with the Chinese companies to develop the fund industry in China. I think to say it's a bubble is probably just a very simplified view of the China market. Firstly, the China economic growth has been growing very rapidly in the last few years, more like 10 to 11 or even higher than 11% growth a year. And along with the corporate earning growth has been very rapid, fast as well, 30, 50 or even higher corporate earnings growth a year. So that justifies a high valuation of the market. It's not just like the other Southeast Asia market, where you seldom find Asian economies or other developed economies growing at that sort of high rate, and also corporate earning growth at that sort of high rate. The other important contribution to the high valuation in the market is the free float in the China-Asia market is very small. As we know, a lot of the major companies in China has been listed in Hong Kong in the last few years through the H-share, and the part listed in H-share is much bigger than the part listed in the A-share, usually a few times bigger than the A-share market, A-share listing. But compared to the demand, the money flowing into the market in China is even bigger. At one stage, the turnover in the China market is much bigger than those in Hong Kong market. It's only until recently they are more or less the same. So I think it is the supply and demand of the market that drive the valuation to a much higher valuation level than what is in other places. Obviously, over time, that will be deflated. The China A-share will be deflated through increasing supply of stocks into the market, like the new IPO, the reduction of the state shares, and so on in time.